All right. Hey, everyone. It's Investment Tuesday. And today I want to talk about a bull market that is emerging in secret that no one is paying attention to or talking about. In other words, it's really early. All right. And one of the things that you're going to feel as I tell you about this bull market is like, Paul, this is so useless. This is so dull. This is so boring. Give me the next AI stock, Paul. Give me the next AI stock. And before I get into this week's, YouTube video, I just want to say that bull markets don't go the way that you want, right? I mean, you just think like 2009, everyone's expecting the Great Depression. Instead, it launches the longest bull market in history, right? In other words, pretty much the opposite of what everyone was thinking. Because what? Well, I mean, the market's crashed. Everywhere around you is doom, gloom, bankruptcy, recession, foreclosure. And the facts to consider at that moment were really that the Federal Reserve is flooding the market with liquidity. It wants asset prices higher to support the economy. That was what mattered, right? Why am I saying this? Because today everyone is focused really on the rear view mirror. They're focused on the past. They're focused on big tech, wishing they got in at cheap prices in 2009, or else they're caught in like hype trades, AI, space maybe, or like, hey, what fun can I get exposure to SpaceX? Well, what else is like hot in like in like the mania land of like how most people like source out ideas. I can't. I think AI is still like the big hot one. Crypto's fallen away. AI is still the hot one. So my point in bringing all this up is that markets really don't care about the popularity. What they really care about is the dynamics of demand and supply. In other words, if there are more people demanding a certain stock, a certain commodity, a certain investment, a certain crypto, then there is supply. And if there is enough belief, courage, conviction, and some capital about why this can go higher, then people put their money to work, and they put it to work with conviction. They bid it higher. They bid it higher. It's that market action. It's that demand. It's that push. Like, hey, I'm willing to pay a higher price right now for an even higher price in the future, right? That's what you want to see. And from my experience, one of the ways that you can capture all of that, which is what? Well, courage, conviction, belief, capital, and where you can see like, hey, they are acting on this, not BS, acting on this, is by tracking stocks like in the stock market. And it works generally as well, where you can see where prices start to hit multi-year highs when no one is expecting it. In other words, it's a surprise. It's a surprise. People are looking at something else, AI, this, that, and the other. But instead, it's like this sector that you're like, what? What? What are you even talking about? No, it can't be. This is so dull, so boring. We're in the exciting era of AI. How can something this dull, this boring be the next bull market? But you know what? That's how it is. Bull markets go where the demand and supply dynamics pointed to. I don't care about your expectations, doesn't care what you're excited about, doesn't care that the vast majority of what is being produced in media content is about one subject or the other. It goes based on demand and supply. And today, I am going to tell you about, truthfully, like a secret bull market. Like, I mean, no one. Okay, I didn't do like a survey to like determine this for sure, but from what I can tell, there's really almost nobody talking about it. Okay, before I get to it, do my legal disclaimer and disclosure. Wow, the font has changed. I didn't do that. I guess StreamYard must have done this. Wow, great. Well, I kind of like it. This video and the content from ATG Digital is not investment or financial advice. It is presented to all of you as opinion. Please use it as information, engagement, entertainment, Whatever you do with it, it is your responsibility because it is your money, right? So act like that. Next, all ATG. I'm reacting here because this one is now scrolling. Was the previous one not set for a scroll? Okay, never mind. Let me stick to the point here. Come on, stay focused, Paul. All ATG digital content may contain errors, oversights, and mistakes. In other words, hey, you are not guaranteed that everything that I say is truth from above. Yeah, this is based on a best efforts basis. Understand that investment operations have significant risks and can lead to the loss of your principal. Bottom line, you are not guaranteed success. You are not guaranteed gains. You are not guaranteed profits just because I made a video. Or if we put a trade into ATG Digital, hey, there's plenty of losers. I get things wrong all the time. It's in the nature of investing. There's risk. It's a tough game. All right. So you can lose money. So just be wary of that. And if you don't like it, now's your opportunity to turn this video off and to move on to something more fun. I mean, I like the cooking channels personally. Cooking channels, yeah, they're killer. And they don't have to make predictions and be right. They just got to get the food right. But hey, I'm sure it's a tough job. Next. I, the owners, employees, contractors of ATG Digital, own, trade, transact the securities that are mentioned in this video and all content from ATG Digital. I think that's self-explanatory. Next, we do not take money from companies or their managements or from crypto token creators, sponsors to recommend stocks or crypto tokens. This is in a new world where, finance influencers, I suppose, like me, we are offered money to recommend stocks, to recommend crypto tokens, and many people do it. I do not do it. For better and for worse, for gain and for loss, what you are getting is my independent, unique point of view. Next, here are our various free content that we put out. The Substack goes out every weekday that the market is open. Baldman Speculating is now, I can proudly announce, a monthly podcast at minimum. I will do sometimes more if market events or particular situations show up. And then I am on YouTube every Tuesday with a new video, which is recorded on Monday. So if you find I have said something and something's changed, because I record this on Monday, we got to give our team a little bit of time to process the video. Social media, I am very active on X. We are mildly inactive on Instagram. And I used to be more active on Facebook, but we are still, there. I used to do a monthly live stream there, but we really didn't find too many people logging in. And so we're going to focus our video mostly on YouTube. I might do some things on X from time to time because I do have people that seem to read a lot of my posts. So that's where I might go. Next, in terms of getting follow-ons on the stocks that I come on YouTube and talk about. We do have to make people pay for something, right? You give everything away, we wouldn't really be a business. We'd be a kind of charity. But if you want follow-ups, you want, obviously, when we're going to sell. I want some guidance on how do you use this? Many people will just be like, well, I like the stock and I'm going to put a ton of money into it. That's not really a good plan. All right. So just general guidance, talking about markets, there's a lot of instability recently. You want to know my particular point of view? I pretty much we have updates that go out, at least 2 updates that go out pretty much every week. And in it, I talk about general markets before talking about the specific stocks in those particular model portfolios. So if you're interested in that, $9.99 per month, atgdigital.media is where you would go for that. Okay, so back to this secret bull market. And, sometimes people use the word secret for hype. But the truth is that, most bull markets start in secret. Why? Because people are so focused on what has gone up most recently, that they just recently invested in that. My best guess is the vast majority of people started buying chip companies, et cetera, in the last 1 or 2 years. Um, those of you who know me from when I used to be with my old publisher, Bain & Hill, I've been recommending chip companies since 2016. I mean, and we made a lot of money really in the chip cycle that ran from 2016 to 2021. More or less, we exited all of that. And when asked, I have told people, yeah, chips are a very cyclical business. I would not be buyer here. I would avoid it. And we don't own any chip stocks in any of the ATG Digital portfolios. But that's just to make a point that people have just gotten to chip stocks, in my judgment, at the peak. So when a new bull market begins, everybody's focused on here. So if you tell them like, no, that with that, no, sell all that. Yeah, put that away. This is where you need to go. This is where the bull market's beginning. They're like, no. I just got in here. Look, AI is a big thing. It's gonna crush. All the people tell me this is going to be the next thing. This is gonna be the next Nvidia. Meanwhile, the new bull market gets going, and it's quietly like generating, nice gains. First small, then bigger and bigger and bigger. And that's where we are. I would say, this is like inning one. This is inning one of this bull market. Now, fair warning, it's not sexy. It's not super exciting. It's kind of dull. And truthfully, the first time I came across it, and I'm like, what is going on here? What is going on here? I mean, I like, oh man, I'm about innovation. I'm about like all the new things. And instead we got this thing here, and I'm like, oh. But hey, listen, I say that we focus on opportunity, growth, and innovation. And you know what? When you look into it, it's got all three. It's got opportunity, it's got growth, and it's got innovation. All right. So what am I talking about? Now, I have briefly mentioned some of this in YouTube videos, some of the live streams that I have done. Let me get set up to add various screens here. All right. So the new bull market is for electricity. Yes, electricity. Yeah. Hold all the trolling comments, Paul. What? Electricity? And I know most people like uranium. Yeah, no. Just stick with me. Stick with me here. And what I'm going to tell you, like where this is going to go, and just understand, like, this is like you can see this article is from February 27th, right? So essentially it's like what, a month old, which I know for the day traders like, well, Paul, that's pretty ancient. Well, listen, folks, bull markets like electricity, etc., right? I take a long time. I mean, and I'm going to go into why, right? This is not going to be like, like so many people think that the world moves at the pace of the stock market because you're focused every day. But the reality is that to do anything in the real world takes time, right? The stock market can move in a second, in a minute, in a day, and generate all these gains. And, the media can make up a lot of story. People will make up a lot of stories as to why that's true. But this one is driven in reverse. In other words, all the action is happening in the real world. Meanwhile, the stock market really, it's only beginning to be like, is there something going on? And if it's going on, will it last a long time? And right now, no one is really paying attention. And the few that are probably are like, you know what? These stocks are just going up because, like when you think of electricity, what do you think about? You think of electric utilities, and people are like, it's a safety trade. It's a safe haven trade. People are worried about Trump's tariffs, which is true. But nonetheless, they're like, this is just really people buying into something that has a dividend, it's comfortable, it's safe, etc. And I'm saying that's not true. Electricity is a growth sector. Yep, it is a place of opportunity. And let me lay out in this YouTube video why. But first, let's look at some charts done by Wolf Street. I highly recommend Wolf Street to all of you. I don't always agree with everything that Wolf Richter puts out, but I can say it's thoroughly researched, incredibly well done, and a source of so much great information. I highly recommend it to you. I don't want to take credit for the work that Wolf does, which is enormous. If you think I read a lot, he must read even more than me. But look at this. So this is from 2001 to 2024, and while that chart may not like spell excitement for you, essentially that's a breakout chart in a commodity, electricity, that is, it's a long life kind of business, right? If you want to put up a power plant, you want to put up wire lines, I mean, there's licensing, there's regulations, huge amounts of capital. This does not move in real time. Yeah, this takes time, right? So we've got a bull market going on in electricity and electricity prices. That's, all sources, gigawatt hours per year. So that's usage that's going on. What's going on? Why is this even happening? I'm just going to bring up my notes here. Well, the number one reason what's going on is that we've got surging usage that's happening, right? That is there. And this is happening when our electricity infrastructure is essentially, what's the right word? Aged, ancient, out of date, obsolete. Those are all the words that comes to mind. If you've ever seen the picture, I tried to find it, but I couldn't find it. Essentially, I think it's of like the Edison company, and it's from like maybe 100 years ago. And essentially, it has like essentially the Edison plant, and then they've got wires going from it to towers. Essentially, our grid today is an extrapolation of that. We have just kept building on that again and again. The thing is that, as you can see from this electricity generated by source, the old generation was essentially about, you have one central plant and it produces electricity, which is then transmitted and then retransmitted again and again, right? And in the, I don't know, 100 years, whatever time frame you want, it's irrelevant. We've gone from where we were essentially mostly coal and some petroleum to where we have nuclear, but nuclear again is one big plant and it's pushing out. But now increasingly we've got a lot of renewables, which is solar, wind in particular. And these are all distributed in various different places, hard to connect them to the grid. So quite different than a coal plant or a nuclear plant. And then we also have natural gas plants, which are sort of much smaller than a coal plant or a nuclear plant, that can be sited in different places. If you drive by airports, you'll see that there is a natural gas plant that's there. It's a turbine. And the reason it's there is that, like, if there's suddenly like, a huge power surge and the utility in that area says, hey, airport, can you turn on your own power so that, the grid doesn't come down? It's there. But bottom line, what we have is what I will call emergent complexity in the source of electricity, right? Because of the fact that, 20%, let me just share this with you. Like today, nearly 20% of all the power that is produced in the United States is coming from renewables, and coal is down to 16%. In other words, 20% is a big number, right? So there's some issues here, which is that sunlight's not on all the time, the wind doesn't blow all the time. So these renewables have a complex structure in terms of the production of energy. Some of them have batteries, some of them don't. In other words, we've gone from where the power runs all the time using coal, nuclear, to where 20% of the power now is not produced all the time. Um, and some of it has batteries, some of it doesn't. Bottom line, you've got a lot of complicated things going on in the electricity infrastructure. When you have an ancient infrastructure and you also have ancient architecture. Remember, the architecture is essentially here's the plant, run a wire, and keep doing that again and again until you interconnect all the other wires and you interconnect, obviously, houses, factories, all the above. Yeah, I mean, the infrastructure and architecture of our electricity grid wasn't built for what we currently have, right? Okay. Um, the other thing that, let me go back to this, you'll see here, which is that blue line is natural gas, right? I mean, that is what, over 40% of our electricity comes from natural gas, right? And natural gas by itself is a pretty complicated network. There's these pipelines, and they weren't really built for electricity to begin with. They were built for some mixture of providing, gas for chemical industries. A few companies would set up their own generation and use natural gas. And then for residential heating. So you've got, again, one more layer of complexity here that's there, which you got to integrate with the other infrastructure of electricity. In other words, you got a lot of complicated things that are going on. In other words, you got ancient infrastructure, ancient architecture, emergent complexity in terms of sourcing of where we're getting our electricity, going into like a power grid and infrastructure that is 20, 30, 40, 50 years old in some cases, right? Yeah, I mean, and then at the same time, we've got this going on, which is that we've got this, which is what? Electricity generated from all sources. I'll put up another chart that I found, which is, make this a little bit bigger. Yeah, look at that. I mean, and that goes back to 1980. So all of these issues are happening in an environment where electricity usage is surging higher, as I lay out in this X post thread. What's driving the surging usage? Cloud computing, server farms, AI server farms, EVs, use of gadgets of various kinds, and then we have plans, which has been in place really since, I'd say, like 10, 12 years now, which is that we're bringing back the production and manufacturing in the US of things. And then we're going to introduce robotics, automation, robo-taxis, wider use of blockchains. These are all things that use more and more electricity. So you've got the underpinnings here of a huge bull market. And just to prove out my point here, which is that this is the Mid-Continent ISO. ISO stands for, oh gosh, I can't remember offhand. But bottom line, they operate the grid, right? They operate the wires. And all the electrical utilities, all the producers sort of like feed into it, and they sort of like help distribute the power, and it also helps set prices here, which is sort of like a central sliver of the company. It goes from the upper Midwest down to Mid-South. Real-time prices are nearly double from 2024. Real-time prices are nearly double from 20. That's a big deal. All right. So getting down to the point here, which is that what is the play? Like there are electricity futures which are based on, the various ISOs. Those prices are set, real-time prices, and those are mostly professional markets. You really can't participate as a retail trader in there. I'm sure there are some people who do and be like, Paul, I make all this money there. Hey, fair enough. But I'm going to say that the average retail investor can't really bet on electricity prices. So if that's the case, then natural gas is the sort of like the most direct play that you can find on electricity prices. Why? Because as I laid out, natural gas plants are already 40% of the fuel source, right? And we can see that the market's noticed. Yeah, I mean, in other words, there's actual real demand for natural gas as a commodity, and we also can quite easily extrapolate that if 40% plus of electricity generation, 42% is coming from that, yeah, I mean, it's quite natural that marginal demand for electricity is feeding directly into natural gas prices, right? And let me just scroll this up and look at this, right? This is a chart that goes back to 2021. And you can see we've gone through some surges here and there. I think he has an even longer chart. Yeah, this goes back to 1994, when there's been periods where people are like, hey, natural gas is, usage is going to go up. And what it was is just that it was a very illiquid market. At that point in time, let's say in 2000, yeah, I mean, coal was totally dominant as the form of energy usage. Even in 2006, yeah, it was not very big. But here, right, we're at 42%, and natural gas prices are $4. Yeah, that is just too low for when it goes. Yeah, when we're like 42% reliant on it for it to produce our electricity, $4 is just too low. It's gonna go higher. Well, that's my opinion. I can't guarantee it. It's gonna go higher. So go back to my notes here. Natural gas is the fastest and cheapest way to bring on new generation. However, it still takes between 1 to 3 years to site, build, or run a plant. And that means, this bull market, as it gets going, supply of electricity is going to keep lagging new demand, right? And by extrapolation, supply of natural gas is going to lag demand. Why? Well, if you can remember in 2015, 14, we had the shale boom, which was for oil, but it was also there for natural gas. And a lot of energy companies just got wiped out. And that's made bankers, made exploration companies reluctant to go and take a chance in going and finding new resources. So it's got like this natural tightness, right? In other words, you've had there was, people said it was a bubble, and you know what? It kind of was. It doesn't, look like that relative to a chart going back to 1994, but these companies, if you remember that time in 2015 and 2016, some of these, the stock market capitalizations of these companies was going crazy. But that's all ended. And as is typical after any bubble, nobody really wants anything to do with these things. I mean, the bankers don't want in. Why? Because they lost a lot of money. Yeah, the companies themselves, they're like, yeah, no, you know what? We're going to be conservative here. You know what? We're not going to spend a lot of money to exploration until we're sure that it's going to be cash flow positive. So everything points to a tight market transmitting itself from electricity to natural gas. And so what can you buy? Well, You can buy companies that have current production, and that explored for a lot of reserves in the last cycle, which was in 2015 and 2016. Um, you can buy those. You can buy pipelines and storage companies. You can buy utilities and infrastructure companies. In other words, it's really going to encompass the electricity supply chain in various different forms and formats. So that's one place that's there. So you want to look up companies that have a focus on natural gas reserves, right? And production, right? The production is important because they can now benefit from rising natural gas prices. The reserves are important because, yeah, as the demand comes through, they don't have to go find it. It's already there. It's, they own it. They've explored for it. They kind of need to just connect their supply to it and now produce it, which means what? No expenses. And as prices go up, yeah, their revenue keeps going up. So that's a big deal. Pipelines and storage. I mean, if you're going to be putting up new natural gas plants, well, guess what? You're going to have to put a pipeline to it, right? So that's going to be a place where, like, yeah, the pipeline companies are going to have to expand, which means they will charge higher rates, which will drive higher revenue. So a bull market for those companies. Most of those companies also have storage, so that's another bull market as well. And then finally, if you're a utility, you are any utility, and I'll just put up the 52-week high list today to show you how many of electricity related companies are on the 52-week high list. Okay, I'm just going to count them. 1, Duke Energy, right? 2, American Electric Power. Exelon. 3, Consolidated Edison. 4, DT Energy. 5, PPL. 6, Expand Energy. 7, Atmos Energy. 8, Centerpoint Energy. 9, CMS Energy. 10, Pinnacle West. 11, National Fuel Gas Energy, that's 12. Northwestern Energy, 13. Avista, 14. I think you can get my point here. In other words, we've got the makings here of an enormous bull market that kind of nobody wants, nobody's expecting, and nobody's talking about. Nobody is talking about. All right. Another place that you can go to is infrastructure companies. Now, this will lag a little bit. I mean, engineering companies, and we haven't really yet seen signs of investors coming in to bid those higher. However, I imagine it's just a matter of time, and we don't want to get too early. We'll wait to see that the investors have caught on to this idea, which makes it more real versus just some theory of mine, right? And then that will be a place, and we put like one company in this infrastructure grid rebuilding into the diamond tier at ATG Digital. Sorry, I just recently put it in. I can't provide the name of that stock, but if you are a diamond tier subscriber at ATG Digital, you can go and you will find it. And then there is a really obvious play here, right? A really obvious play here, which is, well, there's a few obvious plays here. And also, let me just say that this trend, if you will, is so out of favor, right? There's not even an ETF for companies that play into this trend. In other words, it's so early that nobody has yet thought to put like all the natural gas producers, reserve companies, storage, pipelines into an ETF and call it the electricity ETF. Heck, I should do this. I mean, somebody I'm sure will do this, but it'll probably come in a year or two when, they're like, oh yeah, this is there. Because generally, any bull market that's fairly mature has multiple ETFs. So, well, that's not the obvious play. There is, an ETF for natural gas. Now, well, this is crazy volatile. And it has been dysfunctional in the past. I think it works mostly okay, but I have to warn you, this is, a way to play, but only on the natural gas prices of the commodity itself, right? My experience is that, like, yeah, this is going to be good, but if you can find exploration companies, those are going to be the ones that go up the most. And the reason for that is that right now, no one is valuing all the reserves that they have in the ground, right? I mean, they're just like, okay, they're selling gas at the price, and there's revenue that's growing, but they've got, vast amounts of this. And if I'm right, no guarantees, and this goes on for 5, 7, or 10 years, all those reserves become cash flow. All those reserves become profits. Why? Well, they don't have to do anything to get those reserves. They're already there. I mean, yes, there's some small incremental expenditure to connect those reserves, if to the extent they're not connected already, to produce them. But for the most part, everything is going to drop down to the bottom line, and the market's going to go crazy for those stocks. But there is no ETF that has all of those stocks. So you're going to have to buy them right now, kind of like one by one. And I have just discovered this, and I was excited to bring it all to you, but I can't share all the stocks yet because I think that's fair. There are people that pay me in ATG Digital for ideas. And today, actually, we put one stock into each of the tiers: the silver tier, the gold tier, and diamond tier, which is our buy and hold stock tiers at ATG Digital, to capitalize on this fund. But there is an even more obvious, if you will, play on electricity prices that everyone that's been following me for some time knows about, which is Bitcoin. And you may be thinking, really, Paul? I thought Bitcoin is driven by, whatever, monetary stuff, money stuff, the Federal Reserve and gold and this. Yeah, that's actually not completely true. I mean, the vast majority of Bitcoin's production costs are electricity, right? And I'll make the case, and other people make the case. I mean, the University of Cambridge tracks the cost of producing one Bitcoin, right? It's not perfect because, there's so many different mining companies, and each mining company has slightly different electricity costs, uses slightly different mining rigs, has real estate prices that are slightly different, may or may not run more or less efficient, operations, but nonetheless, they come up with an average cost. And the cost of producing one Bitcoin today is around $89,000. So this is the cost. Remember, this is not the market price of Bitcoin. There is a clear relationship between the cost and what people are willing to pay for Bitcoin. And my research shows that at the peaks, like in 2021 and in 2017, people are paying for, between 5 and 10 times the cost, right, of Bitcoin. So the idea here is this, which is that electricity costs keep going up. That gets capitalized into Bitcoin's cost, right, the cost price. And then as people start to quite naturally use the cost as a reference point, it's kind of like, the way I think about it is like book value, right? There's a book value for like stocks, like financial companies in particular have a book value. Why? Because all of their assets are denominated in something that is easily measurable: bonds, cash, right? So there's a book value. One times book means that, that's the total value of the assets. In a kind of way, Bitcoin's cost is its book value. And like any other market price, the market price fluctuates in and around book value, but there is a clear correlation between book value and the market price. It fluctuates a great deal, but there is a correlation. And there equally is a very strong correlation between Bitcoin costs and electricity costs, right? So you take all these three: electricity costs correlating to Bitcoin, Bitcoin's cost of production, correlating to electricity, and market prices correlating to Bitcoin. And Bitcoin starts to become a proxy, at least based on its cost, based on electricity costs. In other words, as electricity usage continues to rise, driving prices higher, the price of producing one Bitcoin is going to keep going up. And during bull market periods when people are super excited, emotional, in the mood to buy Bitcoin and pay higher prices, they will bid it higher off that rising price. I mean, I showed you earlier that the price is now at about what, 89,000. It actually hit a high of 95,000 late in February. So yeah, let's say we have, a big bull market come the second half of this year. And yes, I know you'll troll me, Paul. You said everything will be up. Hey, listen, anything I say is not like from above. Yeah, there is chance, risk associated with it. You pays your monies, you takes your chances. Yeah, that's the nature of all markets all the time, right? You're not guaranteed some outcome. But nonetheless, let's say we have a Bitcoin bull market and we've got whatever. I mean, if the cost hit $95,000 in late February and we've got electricity prices going up, yeah, I mean, the next big jump, right, in the difficulty that drives, greater usage of electricity, of those rigs, mining costs will go up, and that will be capitalized in the cost of producing a Bitcoin. And at some point in time, the market will be like, well, the cost of producing one Bitcoin is whatever, 100,000, 110,000. It's got to be worthwhile for the miners to keep producing, right? Producing those Bitcoin. Otherwise, I mean, why do it? So there is a natural logic here that ties electricity to Bitcoin cost and Bitcoin cost to market prices. And so Bitcoin, I mean, if there's going to be an electricity market, there's going to be a Bitcoin bull market as well. So that is another sort of like non-obvious play on Bitcoin. Well, obvious to me, but probably not obvious to most folks that are out there. All right, bottom line to this week's video, a secret new bull market in electricity, right? That no one wants, nobody's expecting, and is surprising, partly because we are focused on more exciting stories like AI and others. Nonetheless, the electricity bull market is big. The way to participate in it is to buy anything related to natural gas. I didn't really get a chance to go into why uranium is not yet a play, but I'll cover that another time. Just take it from me right now that they're not building uranium plants. They're not building nuclear plants, so you can't use uranium. And, if you have usage surging, you need to put the plants up now. You can't be like in 10 years from now. So you want to go to the thing that's the shortest line to the opportunity, and that's natural gas. The number one place you'll get biggest upside, in my judgment, is going to be companies that own a lot of natural gas through production and storage. There's virtually no exploration going on for any number of reasons. And then there's the entire sort of like supply chain, pipeline, storage, utilities, all of that will get bid up. Infrastructure will get bid up in various ways, shapes, and forms. And then there's, proxies, if you will, for electricity. One is natural gas, the commodity, and another one is Bitcoin. So that's it. That's this week's YouTube video. I hope you found it useful. If you are looking for ideas, guidance, and continuing follow through, explanations, etc., on this bull market or any of the other videos on this channel, ATG Digital Media is where you go. Thank you all for watching. This is Paul saying thank you and goodbye.